Okay, so what do you do when you lose money in your investments? That's what we're going to talk about today. Welcome back to Keith Talks, guys. My name is Keith, and in this channel, we talk about everything investment related, from stocks to cryptos and beyond. So let's talk. So you made an investment, you took some money, and maybe you listened to a YouTuber or someone on a podcast or your buddy, and you put a large chunk of money or maybe a small chunk of money into an investment. And let's say it went down a lot. So the question is, what do you do now? Well, first things first. When you're down on something, you want to ask why you invested in it in the first place, right? What was your conviction? That's what I do. You want to find out what your conviction actually is. Because if you don't, and you make the mistake of actually buying something because of FOMO and then selling it because you're panicking, you might end up screwing yourself over because you could lose a lot of money, and then maybe that investment actually goes back up and you have regretted it in the first place, right? So what is your conviction? What was your reason to even get it in the first place, right? Are you a value investor, right? Did you look at the company's fundamentals? Is it a stock? Is that what you did to invest? Maybe you're investing in Alibaba stock right now and everyone's telling you not to, and it seems like a great investment, but it keeps tanking down and down and down. Well, during that time, you want to ask yourself, what's your conviction? Why did you buy the stock? Do you understand the company, what they're doing? Do you understand the numbers? Maybe you bought Dogecoin and it's crashed a lot and you bought it at the top. Well, what was your reason to buy it? Did you buy it just because Elon Musk tweeted it? Or you really believe in the fundamentals of tokenomics and the network effect and all these other things that people talk about in the crypto space? Or maybe you lost money in real estate. Maybe you bought a property thinking that you were going to make a lot of money, but the market is kind of stabilizing. Or you bought the property and you were able to house tenants, but even though you house tenants, you're actually paying more money for it every single month because the mortgage is not covered by the tenant's rent. And you still have to pay out of pocket every single month. So it's like a second part-time job now. But you're just maybe holding off on the appreciation. Maybe your plan is to sell 2-3 years down the road from now. What is your conviction for something like that? What is your conviction? That's the first thing you want to know. Because when you find out what your conviction is and you really understand it, then that's going to be your sole reason for why you don't want to sell something. Or it's going to teach you a lesson in what mistake you made by making the purchase that you made. For example, if you just bought a crypto coin because Elon Musk tweeted it, well, what are you going to do now? Are you going to actually look back and then say, okay, that was a mistake? What should I be looking at when I invest in the space? And then start learning about the industry, the space, and then try to get self-educated more about it so you can actually make the right investments in the future? Or are you just going to sell or just hold and be a bag holder for the rest of your life until maybe one day it'll go back up, hoping for that extra edge? You see, I've made several investments. I'll go over some of them. So, like I was mentioning earlier, Alibaba stock. I purchased Alibaba stock and it tanked. And you know what I did? I bought more. Just because I had some cash there in my balance. So I used the rest of my cash to buy more Alibaba stock in my stock account. Why would I do that? Because I have conviction. I believe that the numbers are good coming out of Alibaba, and it's the largest company in China, and I don't think that they're doing fraud, and I highly doubt that they're going to get delisted, even though that's what they're all talking about in the news. So I doubled down on it, and if it tanks more, I'm not going to do anything. I'm just going to keep what I have because I still strongly believe that they're worth way below what they actually should be worth. Well, what about my crypto? All crypto is tanking right now. Well, I'm still not selling. Why? Because I understand that the Bitcoin stock flow model. I understand the Bitcoin money flow chart. I understand the Bitcoin cycles. This is something I've talked about multiple times in my channel. The Bitcoin stock to flow model is like a commodities chart. It shows you based on how many Bitcoins that have been mined after every halving, what the average price of Bitcoin should be every single bull cycle. And for this current bull cycle, Bitcoin should reach a targeted price of 100,000 US dollars per Bitcoin. It doesn't necessarily mean it's going to reach it, but it should at least near it or get past it at some point. There's no date. No one can say when that's going to happen. But that's something that I've educated myself about. Educated myself about the Bitcoin money flow chart. I understand that the way money flows in Bitcoin is through the different market capitalization. So it goes from fiat to Bitcoin, from Bitcoin to large cap cryptocurrencies, from large cap cryptocurrencies to mid cap cryptocurrencies to low cap cryptocurrencies, and then all the profits get sold out and go back into Bitcoin. This is why, even though there's extreme volatility in Bitcoin, there's 10 times more extreme volatility when it comes to the altcoins. The smaller the coin, the more high risk it is. And I also understand what you need to look at when you're buying a crypto coin. I know the liquidity pool is very important. I know the project and the founders are also very important. Knowing who they are is extremely important, and what they've actually created and how what they've created is competing with its competition. Not only that, but tokenomics. How was the coin created? Is there demand for the coin? Meaning, is there going to be a network effect? Are people actually using this coin on the network? What's the volume of transactions that are happening? All these things I had educated myself on. This is my conviction for not selling when it comes to crypto coins. But at the same time, I have made mistakes in the past. And that's how I even learned this in the first place. Sometimes you'll make a bad investment, one or two bad investments, but then you'll learn from that. Now, when it comes to real estate, I didn't go out and buy $1 million house. Instead, I bought a house for just less than $10,000. Why? Because I could, and I used something similar to the Burr strategy to do it. And it was like 9 hours away from where I lived. But why did I do that? Because I was looking for cash flow. And guess what? I had so much maintenance problems. I didn't realize how much maintenance comes with real estate. But luckily, because I was fully convicted in what I believed in, that cash flow is king, I knew that that's what I wanted to buy. I didn't want to buy appreciation. So if any problems came in, I would be able to pay for it from the cash flow. And that's exactly what's happening. Now, let's say I made a bad investment. Let's say I put a lot of money into something and I made a bad investment. Well, there's nothing I can really do, right? Let's say I made a bad investment in a crypto coin, like for example, Dogecoin. Well, I know that we're in a Bitcoin cycle and I know I've lost a certain amount of money, but there isn't too much I can do. So there's two things that I would personally do, and I'm not a financial advisor, it's not what I'm recommending for you, is I wouldn't sell right away. The first thing I would do is research and learn, see what's going on. Once I understand what's going on, me personally, what I would do is probably take a little bit off and use that money to purchase another crypto coin that actually has good value, that might do really well during the bull cycle. But at the same time, I know that we're in the tail end of the bull cycle, so it's probably going to crash anyway. So I have to really assess my financial and my personal situation, see where I am and how much money did I actually invest. Is that life-changing? Did I put my entire life savings in it? That's stupid. You should never be doing that ever. Do I have things set up for me to be safe? For example, an emergency fund, a safety fund, an opportunity fund. These things are very, very important. Do I have massive amounts of debt or not? Am I investing emotionally? Because if you have massive amounts of debt and you took all your savings every last time and then you put it into Dogecoin, that's a terrible idea. What do you think is going to happen? Because Dogecoin has terrible fundamentals just to begin with. So what if Elon Musk tweeted it? It is a bad investment, but it's a bad investment that went up a lot in price. That's pretty much what it is. It's a bad investment that went up a lot in price. A lot of people only invest in hype stocks like Lucid Motors without understanding that they've made $0 in revenue, yet Lucid Motors is saying that they're going to sell 50,000 cars. Who cares? Toyota has sold more cars. Tesla has sold more cars. So they can at least show that they have revenue. This company doesn't even have revenue. So right now, they're not worth anything. Yet people are jumping into that stock like no tomorrow. So you have to understand and learn from your mistakes. See where you can actually make good decisions and start making those good decisions. Now, when it comes to more high-risk things, you need to understand what you're comfortable with and what you're not comfortable with. See, I'm not comfortable with going all into something extremely, extremely risky. I don't do that. But I do want to learn, and I do want to put my money in different places and experiment just so I can grow and understand the different markets. So what do? I have a small amount of money for fun money. This is what I call it. This is when I'm going on to these high-risk decentralized applications and I'll just put, like $100 in to see if I can make 17% return a day, and it'll happen every single day. And then all of a sudden, there'll be a rug pull. At least I made some money. I can say, or if I lose it, it's not going to affect me. I don't really care. Why? It never mattered to me in the first place. That money was there so I can lose it. It's fun money. It's like gambling when you go to the casino. It's the same thing. So that's what you should be really doing. Find out what your conviction was in the first place when you made that investment. And then second thing is to learn from that investment, because learning from that investment is actually what's going to make you richer, because you're investing in yourself when you're educating yourself. So instead of going out there and just complaining to the world and yelling, learn, because the more you learn, the better you actually become at investing. Thank you guys so much for watching my video. I really do appreciate it very much. My goal in this channel is to reach 1,000 subscribers. So if you found any value at all from anything I said, please follow me. Hit that like button, hit that notification bell, and I'll see you guys next time. Take care.